morning and welcome. My name's Stuart McKinnon, and on behalf of the Shakespeare group, it gives us great pleasure to welcome you all you Chamber of Commerce members here today, and to our seminar or webinar, which is about accessing JobKeeper and the key steps. I'm sure, unless you've been under the biggest rock of all time, you're familiar with COVID and the impact it's had throughout the globe. It's had a significant health impact. In Australia, we've managed to keep that relatively in check, but the financial and economic impact has been significant already, and the government restrictions, which are continuing to follow, are impacting one and all, and we know it's had a significant impact to our friends in the northwest. The government stimulus measures that have been implemented and put into place have been significant, perhaps the most significant in our history, and there's been a lot of misunderstood conjecture around how they work and how they apply, particularly in relation to the most recent and most significant round of stimulus, which is this JobKeeper. So today, what we wanted to do was talk about the JobKeeper provision and stimulus measures itself, how to access it, and particularly the key steps on that particular process. I'll introduce our panel members with us joining us today. We've got Aidan Rando, who's an associate here with Shakespeare. To be, and
hi everyone.
Trips to Broome. Josh Parsons, one of our business services directors, is with us also. He's been coming up to Broome with us now since when, Joshy? The first trip did you
Probably
make?
2007, I think, mate. So, yeah, quite a while.
2007, I guess. We've been coming up since 2000. I had the pleasure of first visiting, getting a topless rental car and driving around, getting lost everywhere. So we've been doing that for many years. And I guess the final person on the panel, and perhaps the most important today, is Andrew Smith. Andrew joined us prior to Christmas as our technical tax expert. He brings with him over 25 years of experience in tax consulting matters, and he's currently a senior tax advisor for the CA, or Chartered Accounting Institute. He's held that role since 2009. The Chartered Accountants are our governing body, and he sits on that panel, so gets regular lines of communication with Treasury and gets all the latest information. He's very good at explaining technical matters in a easily understandable and practical way. So without further ado, Andrew, welcome, and we look forward to hearing your thoughts on JobKeeper today.
Good morning, all. Thanks for the intro. I've got a session today which will run based on a very short series of PowerPoint slides. What we want to do is invite questions primarily at the end. The guys will be raising a few points on the way through, but the aim of this is sort of an overview of JobKeeper with a couple of the key points highlighted. But any questions you guys have and experience of the last couple of weeks is that people who are trying to register for JobKeeper have a few questions. We will take those towards the end of the session at this stage. So just let me share my screen with you, and we should be underway. So I'm extremely hopeful that you can all see that presentation, and I'm sure so we're all away there. So basically, the idea, as you can see today. Thanks. Basically, the idea there is that we can just go through these and we can have a look at what the key aspects. So we're talking about JobKeeper. I would imagine by now most of us that are attending this would be aware that it provides to eligible employees. We'll go through what all that means very briefly over the next little while. It can also apply to those of you that are either sole traders or running your business through a trust or a company or a partnership and aren't actually paying yourself a salary. So it primarily is meant to assist you in continuing to pay your existing employer is but the government is mindful of the fact that a number of trust distribution or something, and so it's made an allowance, a specific set of allowances for those which have their own set of rules. And one of the issues with JobKeeper is that it does come with rules, and those rules do include, as you can see down the bottom there, the requirement of meeting some conditions and also some ongoing reporting to the ATO if you do participate in these arrangements. So, what is an eligible employer? So you're a business. 30% reduction in your turnover. Now, this has been one of the areas of largest questions. How do we show a reduction in turnover? So you might have had to shut down a restaurant or shut down a pub, or your business connected with tourism has suffered a significant loss, but that loss might have only come home to roost at the end of March. So as at right now, for all of the accounts you've done, you've suffered, a minimal. So how do you prove this 30% reduction in turnover? And the test periods work. So a lot of people initially were looking at, but my turnover hasn't fallen yet, but I want to be in these rules because I'm not currently turning anything over. So very, very quickly, I just want to try and explain to you what the test periods are. So if we're looking at right now and you're wanting to register from when this scheme started, which was the 30th of March, and you're wanting to get some money for the wages you're paying in April, there are 3 potential test periods. The first one is the month of March. So 1 month where you look at March 2020, what was my turnover? And then I compare that with March 2019. And was my turnover in the month of March 2020 versus the month of March 2019, was it down 30%? That, whoops, sorry for my very messy writing here, but hopefully you can understand what I'm saying. So we got April 2020 compared to April 19. Now, obviously, April hasn't finished yet. So this will be a projected April turnover versus an actual April 19 turnover. So that would be any sort of reasonable projection of the fall in turnover. So if you're running a pub and the pub's shut on the 29th of March and you've had no turnover this month and there's no prospect of turnover, that's pretty easy. Your estimated turnover is nil. For other businesses that are still trading, that requires a little bit more finesse. And then the other one, if you're still not sure that you get in under that April one, you're able to use a quarter. And if you use a quarter, the quarter you have to use, the first quarter you can use, is the quarter that runs from 1 April this year to 30 June this year. So again, that hasn't finished yet. So that is going to be an estimate. And it has to be a reasonable estimate of what you're going to turn over in April, May and June this year versus what you turned over in April, May and June in 2019. And if on your estimate you're down 30%, then you're in, and you're in from now. So if you can do an estimate of that sort of a drop in turnover, you can join these particular provisions, and you can join them from now. And potentially for all your eligible employees, you can get $1,500 a fortnight of cash from the government to help you pay those wages. So it is quite attractive in that sense. Now, those tests that I've just outlined there are what's known as the normal test. Do you guys, Aidan or Josh, do you have any comments you want to make at that point? Or, I'm sorry to put you on the spot, guys.
I think you've covered it pretty well so far.
Oh, thank you. So they're actually paid to slap me on the back and say that I'm doing a wonderful job. That's not quite true, but we'll go with that. And the next one is the alternative test. Now, these alternative tests, and Stuart and I were talking about these this morning, they were only released yesterday. And we're still working our way around those rules. I can cover cash versus accrual turnover, and I can cover monthly versus quarterly just in a second. So there is a series of alternative tests. Now, some of you will look at those comparisons in the normal test and you'll go, well, hang on, last year at this time doesn't really apply to me because my business only started in November. So there is no last year to compare it with. Or in the middle of last year, we acquired another business, and so our turnover is completely different now to what it was then because we've restructured our business or we've made an acquisition. Or you might just have a business that has really lumpy turnovers. You have lots of income in some months and zero income in others, and the comparison isn't fair because of that. So what they've done is they've introduced, and I think we'd agree, Stu and the other guys, a comprehensive list of alternative tests that to some extent in some of them, because they're quite complex, we're still working through the implications of them. But there is, in all of those scenarios, most of those scenarios that you're going to be able to come up with, there is an alternate test that we can use, but you're probably going, well, I'd say you're certainly going to need to take some advice on those tests because there is a degree of complexity in them. But they do mean that these rules are going to be available to a whole lot of clients who probably have thought that they don't apply. And so if you think you've suffered some sort of detriment, but you're not sure you can get to 30%, you should talk to us anyway, because there's every chance that some of these alternate tests may be able to be used for you. So I've been asked a question by Zoe, are you going to cover cash, accrual, GST, turnover? I think Aidan and I, and I'm dropping you on the spot here, Aidan, but I think we discussed that, didn't we, briefly, in a question a week or so back?
Yeah, we have. Initially, I think it was, yeah, a lot of clients were wondering if they were on the cash or accrual system, how they would calculate it, for instance, for March, when doing their March BAS, and it's been a little bit more, I guess, relaxed to the rules on that recently.
Yeah, so essentially the way it works is a couple of things. If you currently report quarterly or report monthly, that doesn't lock you into which of these methods, test periods you have to use. So you could be a quarterly reporter that uses a monthly estimate, as long as you're comparing apples with apples. So if you compare last year's monthly with last year's April month with this year's April month, that's fine. If you compare last year's March month with this year's March month, that's fine, even though you're normally reporting quarterly. On cash versus accruals, my understanding is that you can use either method, but you're supposed to use, the comparative is still supposed to be the same. So that if you're using cash for, say, April this year, you're supposed to be comparing it with cash for last year. Is that your understanding, Aidan? That's correct? So there isn't, just because you've registered for cash doesn't mean you must use cash, as I understand it. And just because you're registered for accruals doesn't mean you must use accruals. You just, the comparison must be using the same method. That's my understanding, unless anyone on the panel has got any updated one. Okay, Zoe's happy, so so that's good. So those alternative tests, just bear them in mind. Also, I got an email about 20 minutes before this session from CA in Sydney through our head of tax over there, and ultimately it does appear that they're going to introduce even some more alternate tests early next week. And they, at this stage, may cover things like service entities or service trusts, which some of you, those of you that use them, will probably know what I'm talking about. That's been one of the unanswerable questions at the moment, but it appears there's even going to be more criteria that might be able to get you into these rules. So again, this is still emerging. And if you've got issues where you think you don't qualify, there is a chance you do. So I've just got a question there from Liz. I only have income from July to December each year, and so will not be able to show a comparison till July. There is the ability, Liz, under these rules where you're a business that is seasonal, so that you only have income in certain seasons, that you're able to use a different method that will allow you to still get into these rules, even though you don't have income in these particular comparison periods. I haven't, that test, I first started looking at it at about 10 o'clock last night, and I haven't worked through an example of it yet, but there is quite specifically a provision in there for seasonal businesses, and I'm sure we'd be able to work through that and come back to you with some more detail on that fairly promptly. Apologies that I don't know the exact answer, but yes, there is a mechanism for seasonal businesses to seek to get in. Okay, and so those are the rules for eligible employers. You've been carrying on a business, you had at least one eligible employee at the 1st of March. You've looked through the test period, either the normal or the alternate test, and you've determined that you think you're going to be able to show that your turnover's down by the requisite 30% using one of those variety of tests. So I suppose one of the things that you do have to make sure of is that your employees are eligible. And just to quickly run through that, because I think most people get this, but there is around the margins, there's been some poor advice out there, some misleading advice, and there's also a little bit of confusion. Even this morning, I got an email about the types of visa holders that can potentially get into these rules. So very simply, your employee had to be an employee of yours on the 1st of March this year. They have to, on that date, have been at least 16 years of age, and they have to have been an Australian resident for social security purposes. That simply means that they've got citizenship or they've got PR. Now, that does lead to some people being outside these rules. So I got asked a question this morning about somebody who was here on a temporary partner visa. So they're moving towards permanent partner visa, but they're not yet on one. If you're on a temporary visa of any kind, including the 457 or the now 457 equivalent ones, you're not going to be prima facie able to qualify for this concession. So you won't be an eligible employee. So if you're an employer and you look at your payroll on the 1st of March and you go, I've got 10 employees, but of those 10, I've got 4 of them that are here on working holiday visas. Those are out, unfortunately, because they're temporary visas. I've got a couple of people who are casuals, but those casuals have only been casuals for a few months. So the way it works is if they're a casual, they must have been employed as at the 1st of March 2020. They must have been employed by you for at least 12 months as a casual. If they're a full-time or part-time employee, they just had to be on the books at the 1st of March. They had to be employees on the 1st of March. That leads to some other issues. What happens if I've got an employee that was an employee at the 1st of March, but I stood them all down or even terminated them in mid-March because I thought the world was coming to an end and I couldn't afford to keep them on? You can actually rehire those people, and because they were eligible employees at the 1st of March, they will be in the system. So you are able to hire them back and put them in as qualifying employees. There is a degree of flexibility for those of you that have jumped early and got rid of staff because you didn't think you'd be able to pay them. You can actually bring those staff back, but you will have to go through, particularly in businesses where you're likely to have a number of casuals or a number of people on temporary visas. This is problematic. So this has raised issues with, as I'm sure you guys up in Broome are aware, there's a lot of people that come over here on what was the 457. Can anyone remember what the new version of the 457 number is? Everyone just calls it 457, but we know what we mean, right? The replacement version of that. Basically, there'll be a lot of people who've come over here and got one of those for 2 years, have extended that for another 2 years, and are actually now got temporary PR as they apply for PR. Some of those people have been living here for 4 or 5 years and are parts of the community, and they pay tax and their kids are at school and all that. Unfortunately, because they're on temporary visas, they don't qualify for this. They also don't qualify for job seeker. So if they stop being paid, you have a bit of an issue. So casuals who are only semi-regular, the question I've got from Frankie there, e.g. 2 to 3 shifts a month, that's fine as long as they got regular and systematic work over the 12 months. So we've seen an example of somebody who worked 3 hours a week for the last 4 years, and they're clearly eligible. So the issue is if you only had them do 5 minutes of work 11 months ago and they've never worked for you again, that wouldn't be sufficiently regular. But if you're going, here, there's 2 shifts every month, and they've been getting that consistently for the year, and they could have reasonably expected, without COVID coming through, that they would have been getting those shifts going forward, then they're in. So it is quite a flexible system, and you are going to get a lot of people who don't do much work, but they do it regularly, who are actually going to get a pay rise under this, because those employees, to qualify, need to be paid $1,500 a fortnight. And if they're working 2 to 3 shifts a month, 13 hours a month, they're not currently getting $3,000 a month. But under this system, they potentially do get that amount of money. So one other issue, though, that does come up is you must, as you can see on that bottom line there, they must give you the required notice. So if you're intending to, you've gone through your list, you've identified 3 or 4 eligible employees, you've then got to go to them and say, look, I'm applying for JobKeeper. You're going to be my eligible employees because you're the only eligible employees I've got. They now have to sign a consent form that says, I consent to being part of Frankie O'Connor's JobKeeper payment. You have to get that because on that consent form, they also sign to say that they're not getting JobKeeper from anybody else. Otherwise, some employees might, who work for 3 or 4 different places in town, might get approached by 3 or 4 different employers, and they might decide to try and get JobKeeper from everyone. They specifically sign to say that they're not getting it from anywhere else. If you've got someone who's on JobSeeker, then they have to notify, is it Services Australia? You can't get both. So if they've already signed up for JobSeeker, but they could instead be on JobKeeper with you, if you approach them and they agree to sign up for JobKeeper with you, they will have to notify Services Australia that they're getting JobKeeper from you, and they won't be able to then get JobSeeker from Centrelink or Services Australia, or whoever that is. The 2 systems will be linked, and so if people do get both, they will eventually get picked up by the government, and obviously they'll have been overclaiming. Will they be able to get JobSeeker back again after COVID? So yeah, so if somebody comes, no, that's fine. If somebody comes onto the system as a JobKeeper, and at the end of it all, they revert back to being a fairly limited worker, so they're below the JobSeeker income threshold. Once JobKeeper ends, they would then, if they still qualify for JobSeeker, they would be able to go back to JobSeeker. So yes is the short answer, and I hopefully gave you the slightly longer answer as well. So the question on from Broome Chamber is the one that was a beautifully done one, because I was just about to address that. So one of the issues that comes up is, are you able to go on are you able to select which employees go in? Both the explanatory memorandum to the legislation and the ATO in the last couple of days on their website have made it clear that all eligible employees, if you elect as an employer to go in, all eligible employees must be included. So that means that you need to offer it to everyone. Now, they might not all accept it, but you do have to offer it to everyone. So from an employer's point of view, it is a one-in, all-in system. Now, there's a whole lot of technical complexity around that, and there are some Fair Work Act issues, which I don't particularly want to get into in this because I'm not an expert in that area. But if you're going to try and go down the path of saying, look, I've got 10 eligible employees, but I only want to pay 4 of them, you are going outside what the government and the ATO require you to do. So you would want to take some advice around that, because that might otherwise be seen as brave. Yeah, Michael, your question is a complicated one, but ultimately, if you're on a temporary visa, you aren't currently covered by JobKeeper. The person from the ATO may be being brave. I understand that partner visas are a little bit different because partner visas are definitely covered. The issue is temporary partner visas, and often if you actually dig in a bit, the temporary visa and the permanent visa are actually issued at the same time. But let's not sidetrack the whole session with that. I'm happy to take that as a discussion afterwards. Be careful wandering into that area and putting someone on. Yeah, so Abby Murray, I'll take your question a bit later on, as you've kindly suggested I can. So I'll move on then to administration of this. So there's a couple of issues that we need to be aware of. At the moment, if you want to participate in this, you've got to register, obviously, and the registration for this scheme is meant to be by the end of April. The government, though, for those of you that have dug in a bit and followed some of the commentary or been on the ATO's website, you'll notice almost a throwaway line from the ATO that says that if you register, you can register right through till the end of May. The ATO does go on to say that that's not recommended because it will cause all sorts of potential issues with the way that the system works, and it may result in a delayed or inaccurate payment. But if you get to the end of April and you haven't managed to pull all the information together to be able to confidently register, it is possible to go into May and register for the JobKeeper from the beginning of April. But we would recommend that you get registered by the end of April because it will make everything fit within the way the system's set up, and it will ensure payment is done correctly and on time from the ATO. So what will happen is you'll register by the end of April. You should then receive a payment for any eligible amounts between the 1st of May and no later than the 14th of May. So that's the way the system is set up. Now, what that means is it is a reimbursement system. So there is a requirement for employers to pay the amount before you get the money back. So in theory, if you were paying someone $1,500 a fortnight and you paid them in mid-April, and we'll come to this in a minute, and at the end of April, that was the 2 fortnights. If you've got one employee, you've paid them $1,500 mid-April, $1,500 end of April, so you've paid them $3,000 in April, and you're not getting the money back until May. Now, we're aware that for a lot of businesses, particularly businesses that have shut down completely, funding that money for one, or particularly for 5, 6 or 7 employees, becomes a bit of a problem. How do I fund it when I don't get the money back till potentially somewhere between 2 weeks and a month later? How do I fund it? The government has basically referred you to the banks and said, talk to your bank. We've given banks a whole lot of support. Interestingly, yesterday, there was an update that went through that said that all of the banks, Stuart, you're nodding, so I'm sure, all of the banks have now got a panel that you can ring up, and if the only reason you're thinking of not paying your employees is because you can't fund the cash flow, I believe the banks are putting in a particular set of arrangements, but I only saw that yesterday.
It's temporary.
More or less, mate. Yeah, there's been some recent announcements and initiatives that Treasury is putting pressure on the banks to come forward. So they expect that to be finalised end of month.
Yeah, so logically the way that will work is the bank will extend you the money on the basis that as soon as the cash comes back from the government, that the bank will just keep that money and pay down that advanced amount. So it's a form of short-term overdraft at presumably nil or very low cost to the business, where the bank is just tiding you over. So if the cash flow is the delineating issue for you, we can't afford this because of the cash flow. Talking to your banks and perhaps in the short run talking to us to try and walk you through that might be a worthwhile exercise. So that there are still evolving things. I've got a question up in the Q&A. Is leave accrued on JobKeeper component of wages paid? Does anyone else want to take that? The answer is complicated. As we understand it, yes. Is that correct? people are considered to be employees because you've kept them on the payroll. So the leave, the number of days of leave will continue to accrue through that period. So you are accruing entitlements by keeping people on the payroll. That is correct. Okay, where was I? So on this other reporting, there's a couple of other things you're going to have to do that I haven't touched on before. So one is obviously you're going to have to pay people potentially before you get the money back. The other is, particularly in the first instance, you're going to have to let the ATO know how many employees you've got that are eligible and who they are. And at this stage, that's to be done by the 4th of May. Now, if you use single touch payroll, this will be a little bit simplified because the ATO will effectively pre-fill this form with all of your existing employees' details popping up. And you would then just go through and delete the employees that aren't eligible or are no longer with you. If you don't use single touch payroll, you will have to fill in all of the employee details manually. That's just the way that the system works. What you will do from that point on is you'll update that list monthly, but you'll only really update it by exception. So in other words, if someone resigns or leaves your employment, then you will update that they're no longer on your claim. But other than that, you won't have to do a lot. But there will be that initial report of these are my 6 eligible employees, and this is their names and tax file numbers. Then you are going to have to do a monthly declaration. And that monthly declaration is going to be interesting for some of you running businesses and easier for some others. What that would require is that by the 7th of each month, so if we just look at this first month being April, by the 7th of May, you will have to lodge a report with the ATO that shows your April turnover, your actual April turnover, 7 days after the end of the month. This is GST turnover. And you will also have to show an estimate of your May turnover. Now, this is, if you're in the system, this doesn't affect your eligibility. You're already in, but the government wants to track where we're actually going. And this is being used as much as anything to determine whether the system is working and whether the government will need to extend the system at all going forwards. But we do have to report, and that is actually a requirement. Now, some of you, this will be easy because you report monthly anyway, and your system will do that. It might be a bit of a challenge the first time doing the estimate for the month coming. For those of you who don't do any monthly reporting to the ATO, this might require a little bit of help in the first instance, but hopefully after the first time, it should be relatively straightforward. The only other thing, I will take questions on this as we go through. The other thing I wanted to quickly cover was those of you, and someone has asked the question, who are sole traders, or those of you that are individuals working within your own business, which might be a partner in a partnership, a beneficiary of a trust, or a shareholder in your company. So you're running a business, you work in the business, but you don't pay yourself a salary. In all of those scenarios, in most cases, you are going to be able to nominate one of you. So if it's a mum and dad business, or if it's 2 of you as tradies in a partnership, you'll be able to nominate one of you as the JobKeeper individual. And what will happen is you won't have to pay the $1,500 a fortnight, but you will get $1,500 a fortnight paid to the partnership or the sole trader or the trust or the company as income for that nominated person who works in the business but doesn't draw a salary. So if you're a trust, a mum and dad family trust, you're working in the business, you don't draw a salary, you'll nominate mum, say, and every month you'll get $1,500 a fortnight, so $3,000 a month paid into the trust as income of the trust, but you won't have to pay that out. You'll just be able to retain that as income within the entity. So it's just, I was going to say free money. It's not free money, it is taxable income, but it's effectively free money paid into the business to assist you. You still have to be able to show that 30% reduction in turnover, but you are getting it even though you might not have an employee, or even though you're getting it for someone who isn't an employee. That's probably all I wanted to cover on that particular part of it. I'm more happy to take questions on that because there's a lot of variations of people working in their own business. And I just thought I'd sort of touch on that gently. There is, if you are an eligible business participant, so that person working in your business but not drawing a salary, you do have to meet a few requirements. A key one is that you can't be an employee of another entity. So even though you don't work in your business, you're working at the local pub or you're working in another business and you're drawing a salary, other than as a casual, you're drawing a salary as a part-timer or a full-timer, you can't use this business participant 1500 because you're getting a salary somewhere else. Probably enough for an overview at this stage. Is that all right, Stu, or you want me to dig in a bit more on some of those issues? Happy with that? Josh and Aidan and anyone else, questions? Everyone, join in.
I might just touch on is with that monthly reporting for your employees going forward, you can set up your single touch payroll through your software to do that for you. So from the first, or from April really, once it gets set up right, that can be sort of an automated process.
Correct.
And the other thing, maybe just touch on superannuation on the JobKeeper.
Okay, so when you pay JobKeeper the 1500 to your employee, so I've got one question from Coco's. If we get 1500 for a partner, do we report that income? You report that as partnership income. There is no GST on it. It is sort of a GST-free grant from the government, but it is income, but it doesn't have to be paid to a specific partner. So it just forms part of partnership income that could then be dealt with normally at the end. So on to Aidan's question, which is we've got an employee who's eligible. Made a bit of a mess here. We've got Bob, who's our eligible employee. I'm paying Bob the 1500 a fortnight under JobKeeper. You do have to withhold PAYG from these payments as normal. So they're paid, the amounts are subject to PAYG as normal. Super guarantee gets a little bit more complicated. If you're paying Bob more than $1,500 every fortnight anyway, then you'll just keep, because Bob is still working in the business, then you'll keep paying super guarantee on the whole amount. But if Bob was a casual who's only doing either no work or only doing, say, $500 or $600 worth of work, so you're, in other words, paying him more than the value of the work done, the bit that's more than the value of the work done doesn't attract super guarantee. So let's say Bob's a casual, he's still coming in and doing a few hours, and I would have paid him $500 a fortnight for the work that he's doing. I have to pay him $1,500 a fortnight to get JobKeeper for him. The $500 will still attract super guarantee, but the extra $1,000, no super guarantee. Does that make sense? So that's the way that will work. And that will, for some of you, hopefully, as Aidan says, if you've got JobKeeper compliant payroll software, and I believe all the payroll software people are updating as we speak, and some already have, then the system will probably help you work this out. But if you haven't, there is going to be a couple of little challenges for those of you with staff whose actual earnings are less than 1,500, but you're having to pay them the extra. Can I clarify that monthly reporting to ATO moving forward doesn't have to show? No, it doesn't. Once you're in the system, Zoe, you're in for good. There has been a bit of noise around about that this monthly report that we're doing to the ATO is somehow proving our eligibility every month. If you did a reasonable estimate, say for April or for the June quarter that showed you were in, then you're in. And the monthly report you do to the ATO is not a reassessment of your eligibility. You're in all the way through till the scheme finishes, and the scheme finishes at this stage on the 27th of September. So you're in till then, unless the government passes an act of parliament to change the date because someone cures the virus next week or something similar, which I think we'd probably all live with anyway, to be honest. Okay. Any other queries from anyone?
Not from me, mate. Is Elaine there? And can we? Is that answer your questions, Elaine? Is there anything else you wanted to ask that you've been getting asked at your end? I know you've been fielding a bunch of different queries.
Yeah,
Okay,
yeah.
so
So no, you've pretty much nailed it all in a nutshell. And those are the questions that I have been asked. And thank you for clarifying it.
I've just got a couple of quick questions that have just come in there. One from Liz. You've applied for JobKeeper and it asked me the month, and you've put July 2020. when you all know about we do have the rules on the alternate method for those of you with seasonal or lumpy turnover. It's just putting it into practice. So we could actually run through how that worked, you know, as early as later today, to be honest. I've just got to get our heads through it. So I don't know what you want to do with that, Stu. Do you just want me to contact Liz or get Liz to contact me offline and I can quickly...
Probably. I mean, there's so much there in that alternate test, I guess.
Happy to run through that for you, but right at the moment I'd be doing something really exciting, like opening the legislation on my screen, sharing that with you all and reading you subsections of the Act, which I suspect might cause you all to just either cut this off or start drinking immediately.
What's exciting for you, Andrew, is not what exciting for the rest
trust
of
me,
us.
that's not exciting for me, and I understand that watching me do it, it's even less exciting. So where can you get info? The alternate test stuff is starting to be added to the ATO's website at the moment, but obviously you can also get that info from us if you need some clarity. The tests are complicated, some of them, and they're unexpected is probably a better way rather than complicated. Some of them we're sitting there going, hang on, we're going to be able to get clients into this who we didn't think we would be able to. So in other words, the tests are even more generous than we thought they might be for a lot of businesses.
I guess, Andrew, extending on that, I mean, we've chatted at length already about it, that what it really does mean is the 30% reduction versus last year. The misconception out there now is that if you fail that, you don't access. The alternate tests mean you should be asking. So we think the majority of businesses now will be able to access at a point in time. So ask the question, even if you think you're not going to be eligible, you may well be.
So in answer to Aidan's question, if employer does not top up beyond 1,500, can I reduce hours days? So let me clarify what I think you're saying there. You've got someone who might currently be on 2,500 a fortnight. You can't afford to pay them that because there's no work for them, but you're going to pay them the 1,500 to keep them in JobKeeper. Can you reduce their hours so that instead of them working the 40 hours to get the 2.5, you've dropped them down to whatever? So the answer is you can do that within certain parameters. How you do that, you just have to make sure that you don't breach aspects of the Fair Work Act, but generally you can, under these rules, because they were modified Fair Work Act provisions, you can generally reduce hours. What you can't do is reassign someone to you can reassign someone to a different role, but you can't cut their hourly rate. So if you're currently paying someone 50 an hour and you go, aha, I can get them to keep working 40 hours a week by cutting their hourly rate to 30 bucks an hour, that would be a problem under the Fair Work Act under these changes. So if you're doing anything that's cute, you need to take advice from someone who's competent in employment law. On Zoe's question, you can probably do some work on that. I don't want to go through being too specific because everybody else will perhaps get a little bit bored, but if you've got employees, and can you amend those to reflect correctly for ATO? I'm looking at you other guys there. We might need
Sorry, I can't see that question.
Okay, that's in Q&A, mate, which you might have to. So Zoe's put, I would love some advice going back into my April pay runs already completed, including JobKeeper for 15 employees, how I now amend these to reflect correctly for ATO through STP. If you've got STP, I think, sorry, Aidan, I think the
ATO have given it some flexibility for the month of April only, where you can process a payroll as long as it's before the end of April to top all those employees up to $3,000 for the month. So
and if it's payroll, yes, sorry, mate. And if the payroll already shows more than 3,000 for the month, then when you paid them exactly, even if you paid them monthly, it won't matter because the system will be able to apportion that over the relevant fortnights via STP. Is that your understanding, Aidan?
Yeah.
Yeah.
Yeah, mate.
Yeah. So it is quite flexible.
And I guess back to Aidan's other question with respect to that excess and being able to reduce hours, a lot of our proactive clients have been really looking at their payroll, and if there's reduced or restricted trade, you've got to try and reduce your net wage costs to what the JobKeeper is where appropriate. So those agreed reductions in hours can be done. We've actually got templates we've helped make available to clients, and it's just got to be agreed based on those reduced number of hours, and it's really quite black and white. So if, again, we've got actually an email address, stimulus@shakes.com.au. So if anyone has any specific queries they want to send through to us, stimulus@shakes.com.au, we'll get back to you on that. But it's really quite relevant that you should be making changes to your business if you are restricted. We're really, really big on that. And this JobKeeper is just one part of the various stimulus measures that are available.
There's two other quick questions that have come up on the Q&A, which I'll just quickly answer. One is from Coco's. It might be worth mentioning that a partner applying for themselves also has to complete a separate consent form. That is correct. So under those sole trader business type ones, if mum is nominated, mum would have to sign a consent saying she's happy to get JobKeeper from the partnership. So there is a separate consent that needs to be done for that. And on Sandra's question, I understand what you're asking. I'm not quite sure that's the way it normally works though. If you've got an employee whose gross wage is normally 500, my understanding is that leave is accrued based on period of service rather than on actual salary amount that's paid. So the way that you accrue leave is on, if I work for you for 6 months, I might be entitled to 50% of the annual leave entitlement. The amount that you actually pay will be dependent on my salary at the time that I take the leave. So that's ultimately, that's one of the problems with letting people accrue leave for 10 years, is you end up paying it out at a much higher rate than they earned it at. I don't know if that clarified the answer or not, but yes, you will be accruing the leave across that entire period that they're employees. Could you please put the first slide up? That one? Or that one?
That one.
That one? I've got the first slide up there now. Okay, is there any other questions, or we good?
Elaine, was there anything else?
No, guys, I think you've nailed it. Thank you.
No problem.
Well, thanks for the opportunity, Elaine. We really appreciate it. We understand there's difficult times. Reiterating what Andrew went through, and also Josh and Aidan, these alternate tests do mean that everyone should be available, or most could be available, that when we otherwise thought only those that had 30% versus last year in turnover reduction would be available for the JobKeeper. But there's a bunch of other stimulus measures that do exist. You need to act in order to get them. So speak to your advisor, or we're here as well. Like we said, stimulus@shakes.com.au. If you need any help at all, we're here to help. But Elaine, thanks for the opportunity, and hope all you guys stay safe.
Thanks, guys.
Thanks, everyone.
Cheers. Thank you.
Cheers.
Just quickly, sorry, I'm looking so glamorous this morning. I'm still in my jammies. I see that you guys recorded this. Can I perhaps get a copy?
Of course.
Yeah.
If we can figure out how to do that.
Tony knows how to do all that. He's all over it. That's why he recorded it. So we'll make it available for you for sure.
Wonderful. And I'm going to shoot out like a couple of images and shit like that. I'm hoping to, still trying to figure out how I can make video clips and stuff members only on our website. I need a teenager. I really, really do need a teenager. But is it okay if I share it on our website for members?
Oh, for sure, truly. And if you've got people that need direction, we're here. So it's a bloody difficult time. So yeah. For sure.
And if and can I just add that if I did okay, can you let these guys know, and that way I get the next trip to Broome as well.
He's been angling for a races trip, Elaine, and unfortunately it's been cancelled. So next year we'll definitely be up.
Excellent. Yes. No problem. Thank you, guys. That was absolutely amazing. I think, yeah, you guys nailed it.
Cheers,
cool, thanks, and stay safe, eh? I'll give you a call separate, Elaine.
Yeah, no worries. Thank you. Spare
See
time
ya.
out. Bye.
Bye. Tony, you need to shut this down because we don't know how to.